Yeah, so if you look at the long-term wealth creation study, and if you look at the last 20 years in India, that is a period from 2003 to 2022, you find different asset classes have given different, CAGR returns that you're trying to look at. And equity in that time frame of last 20 years have actually given you a 17% kind of a CAGR versus gold, which is around 11%, and fixed income, which is around 7% kind of a CAGR. Importantly, if you were to mix these assets and come out with a portfolio which is 65% equity, 20% fixed income, and 15% gold, you find that the overall CAGR return in the versus in the last 20 years has been closer to 15% kind of a CAGR, which is very closer to equity CAGR that we're trying to look at. But if you were to look at it from a different perspective, that is the drawdown perspective, that is whenever these asset classes have corrected, how have things mattered in that overall context? And in that context, if you were to look at the maximum drawdown, equities have had a maximum drawdown of 60% at a single point in time, and gold has a maximum drawdown of around 29%, right? But a combination of asset, that is that 65% equity, 20% fixed income, and 15% gold portfolio has a maximum drawdown of only 37%. And if I were to average all the drawdowns, then equity and gold has drawdown somewhere of around 9 to 10% kind of a number. And allocation fund, which is there, which is 65, 20, 15 that we're trying to look at, has only had a 4% drawdown. So your drawdowns are 60% lesser on an average basis that you're trying to look at. And that is where it provides you much lower volatility. The other way to look at it is when you look at these returns from a 3-year, 5-year, 7-year, 10-year, 15-year perspective, is to look at the Sharpe ratio that you're trying to look at, right? And which is where it stands out that these funds will have returns which is fairly closer to the predominant asset class that we're investing, which is equities, but with far lower volatility that we're trying to look at. And that is where the Sharpe ratio for many of these timeframes that I've spoke about is marked better than what you're trying to look at versus individual asset classes. And that is where it makes immense sense from a wealth creation perspective to have a multi-asset allocation fund from an investor investing portfolio perspective that we're trying to look at.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।